This week, Meta did something it swore off for 3 years. It started selling a locked-up, closed AI model, the exact thing it kept attacking OpenAI and Anthropic for. And the price is the strange part, roughly a quarter of what those two charge. Cheap AI sounds like good news. For now, it is, but this discount is a weapon. If you use AI at work or build on top of it, next year's price is being decided in this fight. By the end of this video, you'll know who it's pointed at, why the best models are in danger, and the one question that tells you how a price war ends before it starts. Start with the part that makes no sense. On July 9th, Meta opened its first paid AI service. $1.25 per million tokens in, $4.25 out. Tokens are the little chunks of text AI reads and writes, so think of that as the meter rate. The same day, OpenAI's new flagship went on general sale at $5 in, $30 out. Anthropic's flagship sits at $5 and $25. So the newcomer, from the company everyone spent 2 years mocking for falling behind in AI, is charging a quarter of the going rate. And Meta claims this model tests near the top of the leaderboards. Companies don't leave money on the table. When one does it on purpose, at this scale, the price stops being a price. It becomes a message. The question is what the message says. And why the two companies growing fastest in AI are the ones that won't sleep well over it. The obvious answer is competition, and the obvious answer has real evidence behind it. AI prices haven't just fallen, they've collapsed. When GPT-4 launched in 2023, 1 million tokens cost $30 in and $60 out. Last November, Anthropic cut its flagship price by 2/3 in a single move. Google now runs a whole ladder of models, with the cheap end priced in pennies. And a Chinese lab called DeepSeek sells its tokens for under $1 per million. The research group Epic AI tracks this. They're finding, for the same level of capability, the price falls somewhere between 50 and 200 times per year, not percent, times. Nothing else in the economy gets cheap that fast. So the comfortable read is that markets work, rivals undercut each other, users win, and Meta is just the latest bidder in a race to the bottom. That read is true, it's also incomplete. Because it can't explain the strangest detail in the whole price table, the richest company in this fight set the lowest flagship price. And the two companies whose revenue is growing fastest, OpenAI and Anthropic, kept the highest prices. If cheap simply wins, that's backwards. The fastest growers should be slashing hardest, and the giant with nothing to prove could charge whatever it likes. So sit with the puzzle for a second. Why does the company that needs the money least charge the least? The answer is that these prices aren't set by what the AI costs to run. They're set by the wallet behind them. Call it the second wallet. Money from a business next door, one that doesn't care whether the AI itself ever turns a profit. Strategy people have a name for this pattern. Commoditize your complement. Make the thing next to your business cheap so the business itself gets stronger. Your supermarket does it with milk. The milk is priced painfully low because milk gets you in the door, and the store earns on everything else in your cart. Now picture a dairy farm trying to match that price. It can't. Milk is all the farm sells. Meta is the supermarket. Its actual business is advertising. $56 billion of revenue in the last reported quarter, growing a third, year over year. The new AI service is the milk. It doesn't have to make money. It has to get developers in the door. And Meta has run this exact play before. In 2023, it gave its Llama models away for free and said the reason out loud. No single company should control access to AI. Read that with cold eyes and it says something sharper. If we can't win the model race yet, we can make sure OpenAI and Anthropic can't charge for winning it. That was generation 1 of the play. A cheap, locked, paid model is generation 2. Same targets, same wallet. Which brings back the real question. In a fight like this, what actually decides who's left standing? So open the wallets. Meta's is the ad machine. In the first quarter of this year, it threw off about $12 billion in free cash. That's the money left over after Meta paid for the biggest AI build-out in its history, roughly $130 billion of planned spending this year. The wallet refills every month because billions of people keep watching ads. Now the other side. OpenAI and Anthropic don't publish their books, so the numbers here are outside estimates, and you should hold them that way. But the estimates all point one direction. OpenAI brings in roughly $25 billion a year and is still projected to lose about $14 billion this year. Anthropic is growing faster than almost any company in history, and by its own plan doesn't expect positive cash flow until 2029. Both are extraordinary growth stories. Neither pays its own bills yet. Their wallet is venture capital. And a venture wallet isn't a paycheck. It's a loan against a promise. It refills only as long as investors believe, and every refill comes with a clock. One side of this price war fights with a salary that arrives monthly, whether it wins or not. The other side fights with borrowed patience. Meta can charge $1.25 for as long as it feels like it. For OpenAI and Anthropic, the model isn't a side dish on the receipt. It's the milk, and it's the whole farm. If this setup feels familiar, it should. In 1995, Netscape was the internet. Roughly 8 out of 10 people online used its browser, and Netscape charged for it because the browser was the whole business. Then Microsoft made Internet Explorer free and bolted it onto Windows. Microsoft's money came from the operating system. The browser was its milk. Netscape couldn't sell against free, and its share collapsed from dominant to irrelevant in a few years. Now the detail people forget. The government actually won its case. Microsoft lost a trial in 2000. And it didn't matter. The ruling arrived years after the market had already been decided, and the remedy never brought Netscape back. That's the part worth keeping. When a product that pays its own bills competes against a product that's someone else's marketing expense, the law moves slower than the balance sheet. Nobody at OpenAI or Anthropic needs this history lesson. Their founders grew up on it. Step back, because this isn't a story about one aggressive company. It's a pattern, and the cleanest version of it isn't even Meta's. It's Google's. In 2008, Google started giving away a full mobile operating system. Android cost billions to build and shipped for free, forever. Why? Because every Android phone put Google search in someone's pocket, and search ads were the business. Google didn't need to sell the operating system. It needed the road to its store to stay open and cheap. No paid operating system survived against that at any real scale. Notice that no villain is required. Nobody at Google sat in a dark room plotting anyone's destruction. The structure does the work on its own. If making the layer next to your profit engine cheap helps you win, you make it cheap. It's rational every single time, which is why it keeps happening, decade after decade, industry after industry. A free operating system sounded like a gift, too. The bill was just being paid somewhere you weren't looking. So the rule seems simple: deepest pockets win. Except the price table says otherwise, and this is where it gets genuinely weird. The cheapest serious AI on the market right now isn't Meta's, it's DeepSeek's. A Chinese lab with no ad empire, no app store, no second wallet at all, selling tokens at a fraction of Meta's aggressive price. It can do that because its costs are radically lower, which breaks the deep pockets rule and reveals the real one. There are two ways to survive a price war. Either someone else pays your bills, or your bills are so small the price barely matters. Meta has the first. DeepSeek has the second. Now look at who has neither. OpenAI and Anthropic charge the highest prices in the table, spend billions a quarter, and sell the model itself as the business. They're the dairy farms in a market where one rival gives milk away and another breeds cheaper cows. That's the squeeze seat. And the size of the bet parked on that seat is hard to overstate. In the first half of this year, those two companies alone raised about 43% of all venture money on Earth. Not all AI venture money, all venture money. Nearly half the world's startup capital is riding on the side of the war that has to win on margin. If you want to know how subsidized prices behave when the subsidy ends, ask anyone who took cheap Uber rides in 2018. Investors were quietly covering part of every trip. Then they wanted their money back, and fares rose roughly 90% in 3 years. The cheap era ended the day the outside money stopped covering the fare. Meta's version is different in one important way. Ad money never asks for itself back. That makes this discount more durable than Uber's ever was. Durable for Meta, and durable as pressure on everyone who can't match it. Which brings us back to the promise from the start. The one question that tells you how a price war ends before it starts. Don't ask whose product is best. Don't ask whose price is lowest. Ask whether this company needs this product to make money. Answer it for each player and the fog lifts. Meta doesn't, so its discount can outlast anyone's patience. DeepSeek barely does, because its costs make low prices painless. OpenAI and Anthropic absolutely do. Every price they set has to carry the whole company. Drawing that map took no leaked documents, just balance sheets. So say the rule once and keep it. The best product doesn't win a price war, the one that doesn't need the money wins. And the honest good news, right now, this fight is a gift to everyone who actually uses AI. Prices this low, for tools this capable, are real. Enjoy them. Just know whose wallet is holding them up, and read every price tag as a strategy. Because that's what it is. One last thing. Meta was asked whether this new model will ever be opened up the way Llama was. The official answer: we hope to, someday. No timeline, no commitment. Now you know how to read that sentence too. If you want the next move in AI decoded before it's obvious in hindsight, subscribe. There's more of this coming.